you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall, and here with me today is Mike Prentis, manager of the BlackRock Smaller Companies Trust.
Hi Emma.
Hi Mike. So we're running an investment trust special this week, and your investment trust is gold rated by Morningstar analysts. So you should be best placed to explain to us exactly how to run an investment trust. I believe there's sort of a five-tiered process that you go through before picking companies. Perhaps you could explain that to us.
Yes, I mean, when you're investing in smaller companies, it's very important to have a really robust process to choose companies. And it won't surprise you to know that actually one of the key things for us is actually meeting management and forming a view that they are competent and are able to drive their businesses forward, preferably organically, motivate their workforces and without an excessive optimism, let's say. So we like very realistic management teams with a good record. I mean, that's sort of the starting point really for any investment. The second, obviously, is we've got to like the business that they're running. And so we look for differentiated businesses that are quite special in some way. They might have some intellectual property or brand or distribution network, something which gives them a sustainable barrier to entry, effectively, to keep others away. So that's the second. The third is they use this, great management and business to generate cash and profits, both really. I mean, we like to see profits that have been developed over a period of time and preferably are not sort of too cyclically dependent, so structural growth, and to see those profits converted well into cash. And that should mean, fifthly, that the company has a good, strong balance sheet. So we like all of those criteria, and our large holdings, our core holdings, do meet all of those criteria. But of course, when we initially make a new investment, it won't necessarily meet all of those criteria. We'll see the potential for it to meet those criteria in time. And we hope that our confidence builds up and that company will add to that company. And we might start off on an investment at only 25 or 50 basis points, but over time build it up if we like what we see. And if we don't like what we see, of course, we sell.
Of course, ideally returns to investors would be driven solely by these stocks outperforming their peers. But one thing that is unique to an investment trust manager is you can use gearing to boost returns. Of course, gearing can also mean that greater losses if a stock doesn't do very well. How do you use that? Yes,
you're right. I mean, we've had gearing in the trust since 2000, over the long term, but it's been around about 9 to 10% of net assets since 2004. So in fact, we went through the last recession with gearing, which is perhaps not ideal, but we took some comfort from the fact that the companies we'd invested in were generally cash rich. So in fact, the gearing almost neutralises the cash that these companies had on their balance sheets. So in fact, we outperformed during the recession. In fact, we've outperformed every year for the last 11 years. We're about to complete our 12th year. We hope of outperformance, assuming nothing too dire happens for the rest of this month.
And looking then at the smaller companies sector, what are the challenges facing that is unique to this time? One thing that perhaps might spring to mind is auto-enrolment. For the first time, some of these companies might be having to provide a pension from their employees. Is that sort of macro thing a concern for you?
I mean, that's the sort of thing which can affect larger companies on the whole. It's not something which tends to affect the bottom line to any great extent in the sorts of companies we're investing in. The issues really are all of the ones you'd be familiar with, obviously the company-specific ones, and then the macro ones. So in the UK, some of our companies are particularly dependent on the UK economy, not all of them by any means. Coming up to the election, what impact is that going to have on their businesses? In the US, I mean, a lot of our companies actually do have US revenues. Actually, the headwinds aren't quite so obvious, although maybe one possible headwind is an earlier than expected increase in interest rates. And then in Europe, well, there are all sorts of challenges, but on the whole, the companies haven't been re-rated to recognise the opportunity ahead. And some of the companies that get a lot of their revenues there are, they're just starting to see a bit of a pickup. So there are opportunities everywhere and challenges everywhere, and we have to sort of find our way through the minefield. And I think this means you have to be well diversified, but fundamentally invested in really good companies.
Mike, thank you very much.
Thank you, Emma.
This is Emma Wall for Morningstar. Thank you for watching.